My client Dylan came to me with an online coaching business that was structured as an S Corp, and I saved him $177,000. If you are in a services business and you are paying a lot of money, you definitely want to watch this. It's super powerful and super cool. My name is Jacqueline Matoza. I am a retired CPA working with Fortune 25 billionaires, 9-figure earners. I've done really cool stuff in my corporate career, and now I left corporate to help people who are self-made millionaires. I'm going to break down how I saved him the $177,000 and how we help our clients. So let's break this down. I had a client, he came to me with an S Corp. I said, what is your W-2? He said, I am making $102.5K. I said, okay, cool. What's the problem? He said, well, my business made $911,000 and I need help. And I said, okay, cool. That's net, right? Not gross. He said, no, my gross is millions. I said, okay, perfect. That's what I needed to know. I said, what's the problem? He goes, I'm paying too much in taxes. And so I quickly pulled his tax return and ran some numbers for him, and we realized his adjusted gross income is over $1 million, and we needed to get that down. He did have itemized deductions of $20.5K, reducing his adjusted gross income, and he had a little bit of QBI from his business that was generated, and that also reduced his business adjusted gross income by 51.3K. So all of this reduction here took him to 942.5K. So his taxable income was almost $1 million. Young kid, 26-year-old. So very smart, didn't want to pay taxes. The tax due that he was gonna owe, based on this number, this is only federal, was $305.7K. Okay? That was what he was gonna owe. And he said, help me. My friend did your marketing. He told me you're really cool. Help me. I said, okay, this is simple. How much money do you have to invest? He said, you know, I could put a good amount of money away. And I said, okay, what's a good amount? Probably over $250,000. Cool. Perfect. We can do damage now. So I said, cool, let's do a couple of things. First things first, do you need more money? Because once we move everything to a C Corp, you got to keep your lifestyle the same. He said, no, I don't live a big lavish lifestyle. I have a simple apartment, 1 bedroom. It's just me. I'm single. So I said, okay, cool. We are going to keep your W-2 the same. So this carried over. I separated him and moved him to a C Corp for his business purposes. He came to me in November, so we could only do a little bit of work. But what we did was really cool because it was November and the way he did his business billing. So here, his W-2 stayed the same. I said, how many employees do you have? None. They're all contractors. Perfect. Let's put together a 401k. So we had him put a 401k contribution in personally. He did 23.5K. We had his business pay another 23.5K. We backed into this number. So that's a total of 47K in reduction here to the income here. We took his business net income, we did an analysis. I said, how's your billing work? How does this happen? How does that happen? His clients prepay a lot of money to him. So I said, okay, well, you do services. So services in an accrual basis, C Corp, you only earn the income and revenue when you perform the services. So we kept 751, because remember, he came to me in November. So we kept 751.6K in his S Corp going through to his 1040. Then we only put on his C Corp $20,000. That's a total of 771.6K, right? Personal plus C Corp total tax plan, because we're comparing pre-tax plan to post-tax plan, okay? You're probably like, wait a minute, what happened here? What happened here? This number doesn't equal. You're doing something illegal. No, I'm not, guys. I'm not. This here, we put accrual basis accounting. Because he received a bunch of income ahead of time before performing the services, we were able to move 140 $0.2K into 2026 because he hadn't performed the services, so he didn't have to recognize the revenue here. So this is the difference. Okay, so nothing illegal, nothing fake, changing an accounting method when we moved him to the C Corp, okay? Then we analyzed what he did that year. I said, any big expenses did you pay anything out of your personal? Did you do anything? Blah, blah, blah. He said, oh, I went on this business trip for social media content. He's an online coach, so they do a lot of content shooting. And I said, okay, cool. What did you do? He said, well, we shot a bunch of content for my coaching program. I flexed in a bathing suit, did all kinds of stuff and cool things, lifestyle, blah, blah, blah. Cool, okay. So what was that business trip? Cost about $70,000.6. Cool, get me the receipts. I'm gonna look at them, make sure they're reasonable, business expense. Okay, then the retirement plan we put in here, 401k, we turned around, this is a qualified contribution plan. We did a qualified benefit plan, which is a retirement account plan. We put these two together, he added money in here. He put 89.7K in the cash balance, and he put 6.1K in profit share. So this is all money that goes up into a retirement account. So, so we put this through his S-Corp business, okay? So all of this here is going to offset this 751 because it flows through. So this is a business expense. We ran this through the business. We changed the business net income. Then we said, okay, you've got some money in your personal side. You have a bunch of business income because this 751 minus all of this is still a good amount. So what are we going to do? He said, I want to try this oil and gas investment. So we put him in a couple of investments, couple funds. We spread the money. We don't put all money in one basket. So we put 125K into oil and gas. This has to be all done before year end. So he did that. So we were able to change his adjusted gross income on his 1040 down to 539.2K. His itemized deductions, we kept the same. They seemed reasonable, nothing changed. We analyzed his Q-Buy. We noticed a few things changed. We made an adjustment. He had 63K. So his taxable income on his individual side went down to 455.7K. This C Corp, who paid 23.3K into the retirement account, made 20 grand, was in a loss. $3.5K. So what happens? Taxable income, they don't have adjusted gross income, so this doesn't change. We could do 199 analysis, but we didn't need to. So here it doesn't owe any taxes, right? This owes no taxes. It was in a tax loss carry forward of $737, right? 21% of $3,500. This here, his tax bill, not a benefit, not a carry forward. Here, this was $129,000. Okay? This difference, you add these two together, he netted 128.3K total tax. Okay? When we add these across, you add them across, this is 128.3K. So when we look at his taxes saved, you look at the difference here. Here, he owed 305. Here, he's paying 128K. This is the 177.4K savings that we got him just by adding in a retirement plan and doing an oil and gas investment in November. Converting him to a C Corp, moving $140,000 out of the taxation for 25, going into 26. If you want help like this and you're doing services, click the link below. We work with businesses netting $500,000 or more, and we can help you get into a structure like this. If you're making less than 500,000, but your total is 250,000 plus, single, or 500,000 married, filing jointly, we can still help you. Click the link below, schedule a call, and we will help you save money just like we helped Dylan.